17 important things to know before buying Nvidia stock. Nvidia is shifting its revenue sources from gaming to data centers. With the widespread use of AI tools, Nvidia's products are becoming indispensable in the AI sector. Jensen Huang, founder and CEO of Nvidia, said, "Our groundbreaking Blackwell NVL72 AI supercomputer, a thinking machine designed for reasoning, is now in full-scale production among system builders and cloud service providers. Monopoly position in AI chips, dominating more than 80% of the AI chip market, gives the company unparalleled pricing power." Huang added, "Global demand for Nvidia's AI infrastructure is incredibly strong. AI inference token production has increased tenfold in just 1 year, and demand for AI computing will accelerate as AI agents become mainstream. Countries around the world are embracing AI as essential infrastructure, just like electricity and the internet, and Nvidia is at the center of this profound transformation." The castle effect of CUDA technology. CUDA is a robust programming interface that includes a compiler, driver, runtime environment, and full tool set. It allows developers to program GPUs to accelerate applications. When Nvidia introduced CUDA in 2006, it shifted the focus of graphics processing units from graphics processing to high-performance computing. Its competitors were slow to react to this change. Initially, CUDA only worked on Nvidia GPUs. Similar to Apple's iOS and macOS ecosystems, developers adapted to this system, making it costly to switch to other ecosystems. This made Nvidia GPUs indispensable in the industry. In 2012, a deep learning boom occurred when AlexNet won the ImageNet competition. That model was trained on Nvidia GPUs running CUDA. Nvidia recognized this opportunity and entered the market long before its competitors, soon becoming the standard in the AI market. As a result, Nvidia has made 2 CUDA leaps in recent history and built the biggest fortress in the tech industry with its aggressive ecosystem-building strategies. High valuation, the company's price-to-earnings (PE) ratio, is well above the industry average, indicating that the stock is overpriced and risky. Nvidia's current PE ratio is about 58 to 59x. This is well above the industry average of 30 to 35x across semiconductors and technology. These numbers suggest that future growth may already be priced in, so proceed with caution. Uncertainties in the global economy, competitive pressure, and potential future operational problems may negatively affect the Nvidia share price. The recent 10-to-1 share split has made the stock more accessible to small investors. It's like dividing a pizza into more slices. The size of the pizza hasn't changed, but now there are more slices. Or you can think of it this way: if the ticket price drops, more people will watch the competition. You should evaluate this well. Supply chain fragility. Dependence on a few large manufacturers, such as TSMC, for the production of AI chips poses a risk to the supply chain. TSMC is a Taiwan-based company. China's policies regarding Taiwan and the US's stance on Taiwan have an intense impact on the supply chain. A company's strength lies in its balance sheet, and Nvidia is showing it. Its strong balance sheet and positive cash flow not only allows the company to comfortably manage its debt, but also gives it financial freedom for research and development investments and future growth plans. In other words, Nvidia is not only planning for today, but also for tomorrow, and it inspires confidence. Remember, leadership in the world of technology is no accident. Nvidia spends a large portion of its revenues on R&D. This means the company is constantly developing new technologies, aiming to stay at the forefront of GPUs and AI. Every quarter, it increases these investments and strengthens its team, ensuring not only current but also long-term innovation. The semiconductor market is like a tide. When the tide is high, everyone fills their ship, but when it recedes, those on the shore are left stranded. Nvidia is trying to turn these tides into opportunities with its CUDA ecosystem and AI leadership. In the past, we have witnessed cycles such as the growth of the GPU market, the supercomputing trend, deep learning, crypto mining, and AI, and Nvidia has survived these cycles. If you are interested in the company, investor relations is one of the #1 criteria. Nvidia communicates openly and regularly with investors. Transparent reports and announcements inspire confidence. In this way, shareholders can follow not only the financial situation, but also the strategic steps. The official sources, investor.nvidia.com and nvidianews.nvidia.com, allow you to see every step of the company. You can follow the company from official sources, such as investor.nvidia.com and nvidianews.nvidia.com. The gaming segment has been Nvidia's growth engine for years, but it's now halfway done, slowing down due to competition and maturity. The company's new momentum is taking shape on the AI and data center side. Technology growth is no longer as dramatic as in previous years. Competitors price performance-oriented products, and the slowdown in the growth rate of the gaming market make Nvidia an AI-centric company. You know, Nvidia is not only strong on its own, but also shaking hands with giants. Strong partnerships with major cloud service providers such as Amazon AWS and Microsoft Azure reinforce the company's dominance in the AI and data center ecosystem. These partnerships are creating a serious barrier to entry for competitors, and Nvidia GPUs are becoming the standard for cloud-based AI applications. Thus, the company is not just selling products, but growing its ecosystem and solidifying its leadership. The importance of CEO Jensen Huang. This guy not only sets the company's strategic direction, but also keeps the culture of innovation alive, motivates employees and engineers, boosts market confidence by clearly communicating his long-term vision to investors, and plays a critical role in maintaining the company's leadership position in AI and data center. Watch out! Don't get confused by short-term volatility. If you're considering investing in Nvidia, what matters is the company's long-term growth potential in AI, data center, and cloud ecosystems. This video is not investment advice, remember? The risk is entirely yours, but those who can see the long term can see more clearly the future opportunities for this technology leader. Remember, this video is not investment advice. You make your own decision, and the risk is entirely yours.